Let's break all this down with CNBC senior economics reporter Steve Liesman, Washington bureau chief at USA Today, Susan Page, former chair of the Council of Economic Advisors under President Biden, Jared Bernstein, and NBC's legal analyst, Danny Savalos. Steve, first, walk us through all the numbers.
Well, I guess it wasn't the person who was counting the numbers. I guess it was the numbers themselves. I don't think the president got any improvement. These are weak numbers. The number of jobs we need to create to keep the unemployment rate steady has probably come down because we've reduced immigration so much. There could be some effect of deportation here. But no matter how you slice it, it's a weak number. One of the things that looks to be catching up with these numbers, with the top line there, is the notion of government layoffs. There's been 88,000 federal jobs lost, not counting the post office, since the beginning of the year. That seems to be in effect. I think there's a couple things going on from a broad perspective. So parts of the big, beautiful bill, I think, were helpful for business and might be helpful for investment over time. Adding jobs as a result of that may take time. But there's two other taxes I think that business is dealing with. The first tax is tariffs. Those are a big problem, and that's probably hurting manufacturing, which has lost something like 78,000 jobs since the beginning of the year. The other tax is, I think, an uncertainty tax based upon sort of what would you say, random rules coming out of the White House. So I think some businesses are frozen in place as to the extent to which they can even benefit from favorable changes in the tax rules in order to hire. So I think those two taxes are holding back businesses here from hiring. And then you add in the immigration issues and deportations, and you have a recipe along with slower economic growth for slower job growth.
Yeah, 22,000. I mean, that's far below even the projections, and the projections were low to begin with. Susan, last night, President Trump was asked in advance if he would trust these jobs numbers, and he sort of wavered. Watch.
Can you commit to saying the data will be credible?
The number, I don't know, they come out tomorrow, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, the palaces of genius, and when they start opening up, you're seeing, I think you'll see job numbers that are going to be absolutely incredible. Right now, it's a lot of construction numbers, but you're going to see job numbers like our country has never seen before.
Talking about palaces of genius, Susan, can you interpret what he's talking about there?
Well, he's talking about not liking the numbers today, but we'll like the numbers in a year. You know, in politics, a year is like a century away. Next week is like a year away. So we look at today's numbers, and they really underscore this increasing nervousness we see among Americans when they look at the issues that matter most to them. The issues that matter most to Americans are kitchen table economy issues, jobs, and inflation. And on both those fronts, we're beginning to see some warning signs for this Trump administration. Anna?
Yeah, the president, of course, wants good numbers. It's one of the reasons he fired the person in charge of the Bureau of Labor Statistics. His pick isn't in there just yet. Jared, can we trust these new numbers?
We can. I consider these numbers perfectly reliable because the people who compile them, the staff at BLS, Bureau of Labor Statistics, is doing the same job they always do. I think the Trump team didn't quite get actually just how little the BLS commissioner has when it comes to compiling these numbers. She gets the report a day or two before it comes out. We can count on these numbers being accurate from that perspective. The BLS isn't cooking anything. They get revised a bunch, but that's interesting too, because we saw negative revisions this month, once again, just like we did last month. Now, the way that works, Anna, is that as the job market slows and increasing data comes in, we tend to see the revisions be negative month after month because it takes a while for them to catch up with the underlying pace. I'm particularly concerned here that this pace of job growth is not fast enough to prevent unemployment from rising. And in fact, that's what we saw. The unemployment rate is ticking up, and that hurts the economy's consumer spending ultimately. And that's what's been driving this expansion from the beginning. So this weak report actually has negative implications for the future if numbers like this persist.
Yeah, picking up on that in terms of bigger picture, today's lackluster jobs report is only one of the issues. Right now, there are more unemployed Americans than job openings for the first time since April of 2021. And there have been more layoffs so far this year than all of 2024. It's the most since the pandemic's first year. So, Steve, are these big red flags?
Yes, these are things we want to be watching for sure. One of the other things I watch is the temporary help numbers, which were negative as well. When business is good and they want to expand their hiring, they turn to the temporary help companies and say, hey, give me somebody that I can have for a little while, and then maybe I'll bring them on. But when business is bad, the opposite happens, and help from human resources doesn't really, those companies don't really do too much job filling in that situation. So that's a red flag. The numbers you just cited about job openings falling below the unemployment rate is a red flag. I want to give you another red flag, though, which is what's happened to minority unemployment rates. They have shot up, really. In fact, the white unemployment rates have changed a little bit, but it's the black and, to a lesser extent, the Hispanic unemployment rates that have gone up. And I think we have two factors at work here. Some of the federal government layoffs where there might be, especially black women concentrated, that could be a factor. Also, some of the ideas of when the job market turns, it's usually sort of last in, first out. So the extent to which minorities may have been hired as a result, perhaps, of some of the DEI efforts, as a result of an expanding economy, they may be the first to lose their jobs. And so that's another major red flag, I would say.
And guys, we're just getting some reaction to these new numbers from the labor secretary, who danced around addressing these numbers directly, but said, quote, the Fed is failing American workers by dragging its feet and refusing to lower interest rates. So trying to focus in on the Fed, what do they do with these numbers? Let me turn to Danny and bring you in, because there's some new developments related to the president's attempt to fire one of those Fed Board of Governor members, Lisa Cook. And I understand that there is a new development. The DOJ reportedly issuing subpoenas in its new probe of alleged mortgage fraud involving Cook. What do we know? Where does this case stand?
So the reason this is important is that the government, Trump's administration, is using this criminal investigation as the for cause, and I put those in quotes, for cause grounds under the statute that they need to fire Lisa Cook. And really, all of this paper, all of this ink really boils down to a central inquiry. Does for cause under the statute, meaning that you can only fire someone for neglect, inefficiency in the office, does any alleged improprieties as to your mortgages and how you applied or whatever the case may be, does that reflect and does that rise to the level of for cause for a termination? And as a second issue, who decides? This is a common issue in constitutional type authority given to the president. Is this an issue, the president's determination of a for cause termination, is that even reviewable by the courts? The administration cites some case law from 1900 that suggests that it might not be. So that's a second issue in this case that will be very critical.
So, Susan, ProPublica is reporting that loan records show 3 members of President Trump's own cabinet have done basically the same thing he's accusing Cook of, and that's listing multiple primary residences for mortgages. His labor secretary, his transportation secretary, and the EPA chief, all 3 denying wrongdoing, according to ProPublica. These officials haven't been referred for criminal investigations or publicly called out even by the president or the head of the Federal Housing Agency, the Housing Finance Agency, unlike Cook, who's been targeted. What do you make of that?
Well, it's almost as though the alleged mortgage fraud is not really the reason that Trump wants to fire Cook, that he really wants to fire Cook because she's not voting the way he wants her to in the Fed. And so I think this will raise some embarrassment for the White House. I would sort of be surprised if they opened criminal investigations into the 3 cabinet members who are alleged to have done essentially the same thing that Lisa Cook is accused of doing. But, you know, I think Trump is going to get his way anyway. This weakness in the job numbers, the one good thing for the White House, makes it very likely, I think, and Danny may have a more sophisticated view of this, very likely the Fed in September will cut interest rates a quarter point, maybe even a half.
I mean, Jared, just looking at the apparent contradiction here, is this weaponization of the federal government?
Oh, it is clearly that. But I think the punchline is that this isn't going to help President Trump in the long run. I mean, the more he discredits the Federal Reserve and their ability to do independent monetary policy, the bigger the threat you get to inflation. And remember, we're now looking at what I would consider the seeds of a potentially serious stagflation. That means slower growth, like we saw in the job market this morning, along with pretty sticky inflation that's not getting back to where the Fed wants it to get. The more Trump fools around with central bank independence, the more history shows you get higher inflation because you're pushing them on interest rates further than monetary policy would suggest. So not only is he not getting what he wants, but if he did really want to get what he wants, he should come out tomorrow. I'm sorry, he should come out this afternoon and say, trade war over, we won. That would return a ton of certainty to businesses. It would give the Fed the leeway it needs to do what it wants to do. He won't do that because he's stuck in this very wrong-headed ideological view about international trade. But it's that uncertainty in those tariffs that are undermining the job market, growth, and particularly hiring.